HIMS stock is about to explode, but not for the reason you think. Everyone's talking about the growth, the earnings, the celebrity marketing, but there's a much bigger catalyst brewing under the surface, one that could completely reprice the stock, and Wall Street hasn't caught on yet. In this video, I'll break down what's really going to take HIMS to the next level, why I think the current price is wildly disconnected from the long-term potential, and at the end, I'll reveal my full price target, along with exactly how I got there. Fair warning, it might shock you. Let's get into it. First, let's go over their Q1 results, because honestly, they were insane. Revenue came in at $586 million, up 111% year over year. Operating profit, $58 million, which is a 480% jump. Net income surged 345%. Free cash flow rose 321%, and they're now sitting on 2.4 million paying subscribers. This isn't just a growth story, this is a company scaling faster and more profitably at the same time, and the market's still treating them like a risky DTC brand. Now, the real kicker? They've locked in a partnership with Novo Nordisk to distribute Wegovy, one of the biggest weight loss drugs on the planet. That deal alone removes legal risk and opens up a whole new revenue stream, but more on that in a second. Here's where it gets exciting. HIMS grew revenue by 111%, but operating income that grew nearly 5 times faster. A 480% spike. That's called operating leverage. And it's one of the most powerful forces in investing. It means their business is finally hitting that point where costs grow slower than revenue, and profits start to accelerate like crazy. Marketing spend is now just 39% of revenue, down from 47% last year and way down from 50% back in 2021. That's what happens when a subscription-based business starts compounding. I've said this before. Amazon had the same thing in its early days, where profitability was hidden under the surface because of high reinvestment. HIMS is now past that stage. Their flywheel is spinning, and the more they grow, the more efficient they become. Let's talk about what's coming next, because this is where the upside gets huge. First up, GLP-1 weight loss treatments. HIMS is now offering Wegovy, compounded semaglutide, oral GLP-1s, and liraglutide, a full stack of treatment options. And they're projecting $725 million in GLP-1 revenue this year alone. That is game-changing. It's not a pilot program, it's a real business line already scaling. Next, they're expanding into hormonal therapies. That means testosterone replacement for men and menopause treatments for women. Combined, that's a $22 billion market in the US alone. Even a 10% share over the next few years could add billions to the top line. And at scale, those margins flow straight to EPS. They're also going global. CEO Andrew Dudume confirmed international expansion is in motion, and the HERS brand? Still massively underpriced. Their dermatology segment is already up 50% year over year, and they just launched a podcast aimed at women's health and wellness. Just listen to how big Andrew thinks the HERS business can get.
You know, long term, I think the women's business will likely eclipse the HIMS business. I think the reality is HIMS encompasses some of the more long-standing categories that the company has had. This is things like sexual health and men's dermatology, and these are businesses that men know in this country. The brand awareness is extremely high. We launched HERS just a year or two after originally launching the business, and so it's a little bit of a younger business line. But when you think about the categories like we're talking about, things like obesity, things like mental health, things like menopause and hormonal balance, dermatology, these are categories that affect nearly every single household in the country. You're talking about 100 million plus women in particular across all of these. It's huge.
If they continue to execute, HERS could go from a side brand to a cultural movement. Think Olaplex, think Stanley Cups, think Lululemon. When women get behind a wellness brand, it spreads. Now here's what I believe gives HIMS a 10-year head start. I call it the HIMS Trinity. First is Tribe Labs. They paid just $5 million for a company that enables blood diagnostics, metabolic tracking, and personalized wellness. That's not a business acquisition, that's a data moat. Second is the peptide facility. They now control part of their own drug manufacturing stack, which gives them pricing power and the ability to deliver truly custom treatments. Third is MedMatch. This is their AI engine. It helps match users with treatments using biometric and health data, and that's where this becomes intelligence-driven medicine, not just convenience-based telehealth. This trifecta gives them data, production, and personalization, which means better outcomes, better margins, and higher stickiness, and no one else in the space is close. Now, let's talk guidance because this is where Wall Street is asleep. Management reaffirmed guidance at $2.35 billion in revenue for the year, which would mean flat growth from quarter 1 through quarter 4. That's not just conservative, it's implausible. They just posted $586 million in Q1. They're launching GLP-1s, expanding into hormonal therapy, and seeing strong core growth across every major vertical. A more realistic scenario, Q2, $645 million, Q3, $710 million, Q4, $780 million. That gets you to $2.7 billion for the year, 17% above guidance. And this isn't wild optimism, this is just normal sequential growth from a business with tailwinds in every direction. And this kind of growth, it's just getting started. In fact, listen to what the CEO said recently about where they're headed next. So yeah.
We only make money as HIMS and HERS when you as the patient are happy. If you're not happy, if you're not feeling better, if you don't feel taken care of, if you don't think it's worth it, you just cancel. And when you have that type of alignment, we're going to do everything possible as a company to make sure you're getting the most value as you possibly can and you're feeling the best you possibly can. And that's going to push us to innovate on your behalf. So what you'll see from us in the next 10 years is more innovation on behalf of the consumer. You'll see broader selection of categories, new categories like pain management, like sleep, like hormonal balance, testosterone therapies, perimenopause, menopausal therapies, longevity, cardiovascular preventative care, diabetes preventative care. When you think about all of what I just said, you pretty much make up about 80% of the reason people die in the US, right? It is healthcare. It is the majority of healthcare. And I think you're going to see us continue to broaden the categories and also go much deeper within each to be able to build much stronger relationships with these customers.
The runway here is long, really long. Now, let's get to the fun part, the long-term price prediction. Let's project this out. If they hit $2.7 billion in revenue this year and generate 10% net margins, that's $270 million in profit, or about 1.20 earnings per share. If EPS grows at 25% a year, which is doable given their leverage and expansion, that gets you to about $11 EPS in 10 years. Apply a 35x earnings multiple. That gives you a share price of $385. And that doesn't even include deferred tax assets, which could increase EPS and the share price to $400. Now for a quick note on risks, because no investment is perfect. Management has a history of stock-based comp and dilution. It's something to monitor. They just raised a convertible note, which adds debt to the balance sheet. Regulatory risk is always present in telehealth, and there's always execution risk, especially with expansion and acquisitions. But here's the deal. These are manageable risks, and when you line them up against the upside, the reward-to-risk ratio is ridiculous because this isn't just a subscription health company. It's a vertically integrated software-driven platform with data, distribution, and defensibility. They're operating efficiently. They're entering billion-dollar markets. They're playing the long game, and right now, the market still doesn't see it. If they keep executing, if the flywheel keeps spinning, this could easily be a $400 stock within the next decade. And if you're still here, leave a comment saying Trinity Mode. I'll see you in the next one.